Hello everyone, and welcome back to Explain the Charts. Today, November 20th, 2025, we're doing a deep dive analysis on Alphabet, ticker Google, which has been making headlines with a spectacular surge to all-time highs. There is a tidal wave of bullish news driving this rally, so first, we'll break down the major events, and then we'll dive into the charts to see what the price action is telling us. The biggest news is undoubtedly the launch of Google's new AI model, Gemini 3. Reports highlight its major advancements in reasoning and multimodal inputs, and this has generated enormous investor enthusiasm about Google's position in the AI race. This wasn't just a minor update. The market is viewing Gemini 3 as a significant breakout for Alphabet, directly correlating its launch with the stock shattering the $300 barrier for the first time in its history. As if that wasn't enough, another massive catalyst hit the wires. Warren Buffett's Berkshire Hathaway disclosed a new, sizable stake in the company valued at over $4.3 billion. When a legendary investor like Buffett makes a move this big, it sends a powerful signal of confidence and value to the entire market. These twin signals of technological breakthrough and institutional validation have created a perfect storm for the stock. Analysts are also piling on, with firms like Loop Capital upgrading their rating to a buy and setting price targets as high as $320, citing a resilient search business and huge growth in the Google Cloud unit. So, with that incredibly bullish fundamental backdrop, let's turn to the charts and see how this has all translated into price action. Here we are looking at the daily chart for Google, and the long-term trend is undeniably bullish. We can see the stock has made a tremendous run-up from its 52-week low around the $140 level earlier in the year. After a period of consolidation, what we've witnessed in the last few days is a powerful, explosive breakout to new all-time highs. Let's zoom in on this recent action. For months, the stock faced resistance in the $280s, but the recent news completely shattered that ceiling. The most critical candle to look at is yesterday's, November 19th. The stock gapped up on the open and surged to an intraday high of $303.81. What's incredibly important here is the volume. We saw over 68 million shares traded, which is roughly double the average daily volume. This massive volume confirms the conviction behind the breakout and suggests that large institutions were buying heavily, likely reacting to both the Gemini 3 and Berkshire Hathaway news. A breakout on high volume is a very strong bullish signal. The previous resistance area around $285 to $290 should now be considered the first major level of potential support on any pullback. Furthermore, the psychological $300 level is a major milestone. Now that it has been breached, bulls will want to see it hold as a new support floor. Now let's switch to the 1-hour chart to get a more granular view of this recent rally. We can see the steady climb leading up to the breakout, with price holding key levels. Yesterday's price action shows a massive gap up at the market open, followed by a powerful push higher in the first few hours of trading. However, we can also see some profit-taking occurred in the latter half of the day, as the price pulled back from the highs above $303 to close at $292.81. This is not necessarily bearish. It's quite normal to see some selling after such a monumental move as early buyers take profits. The key will be to watch how the price behaves around this new support zone. Drilling down even further to the 15-minute chart of yesterday's session gives us a clearer picture of the intraday battle. The initial surge at 14:30 Universal Time Coordinated was immense, happening on explosive volume. The price then consolidated near the highs for a couple of hours before sellers stepped in around 1600 hours Universal Time Coordinated. The pullback was orderly, not a panic-driven collapse, and it found some stability in the low $290s into the close. For short-term traders, the intraday high of $303.81 is now the immediate resistance to beat. On the downside, the opening price of $287.16 marks the top of that massive gap, a level that could be a target if weakness persists. So, what's the case for being bearish or cautious here? Back on the daily chart, The primary concern is that the stock is now technically overbought in the short term after such a vertical move. The price is extended far from its moving averages, and a pullback or consolidation period would be healthy and expected. There is also the significant gap up from around $285 to the opening price, near $287. In technical analysis, gaps like this often tend to get filled, meaning the price could revisit that area in the future. A broader market downturn could easily trigger this kind of pullback. We also have to consider the AI mania narrative. While the technology is real, market enthusiasm can sometimes get ahead of itself, leading to volatility. So, let's bring it all together and recap the key levels and potential scenarios. For the bullish case, the path of least resistance appears to be higher, backed by powerful fundamentals and a confirmed technical breakout. Key support levels to watch are the psychological $300 mark, followed by the breakout zone between $290 and $293. As long as the price remains above this zone, the bullish trend is firmly intact. Resistance is now in price discovery mode, but the next logical targets would be psychological levels like $310 and then the analyst target of $320. I would place a high probability, around 70%, on a scenario where Google either continues to drift higher or experiences a mild pullback to the $290 to $300 support zone before resuming its uptrend. This scenario is reinforced as long as the broader tech market remains strong. For the bearish case, a break and close below the $290 support level on high volume would be the first major red flag. This would open the door for a potential gap fill down towards the $287 area. This scenario becomes more likely if we see a broad market sell-off or if sentiment on AI begins to cool, perhaps triggered by disappointing news from other tech giants. I'd assign this a lower probability, around 30%, given the current momentum. Moving forward, keep a close eye on broader market trends, especially upcoming NVIDIA earnings, as they can heavily influence the entire AI sector. And of course, any further news on Gemini 3's adoption and monetization will be critical for sustaining this rally. Thank you for watching this analysis on Google here at Explain the Charts. Remember to like and subscribe for more in-depth chart breakdowns. Before you go, please be aware that this is not financial advice. This video is for informational and educational purposes only. Always conduct your own research and consult with a financial professional before making any investment decisions.